Hi,
Good
Danny.
morning.
Morning, Ben.
Good morning. Good morning.
Morning. Right.
Oh my Lord.
We have Sanchit with us, joining from Nepal.
Welcome. Welcome.
Yes, welcome. Thank you, Daniel.
I'll be on for a little while, so until I get to work. So.
All right.
That's when I'll get off.
Okay. All right.
Man, it's cold.
Really?
It's ice. If you see my picture on WhatsApp, you'll see.
Let me see. I will check it.
I've never seen. I don't know, ice freezing like that before in my area.
All right. Okay.
Do you see my status?
I see your status on WhatsApp. It hasn't updated. I see your little fellow.
That's my profile pic.
Yeah.
You should be able to see it on my
chilling at home.
WhatsApp status.
Okay. Shall we get started? Ben?
Anyways, it's cold.
Yeah, that's the whole point. All right. Shall we get started then?
Get it on. Let's get it on.
Okay. So Sanchit, what we do is, since this is a free session of Zoom, it takes, we do about 40 minutes. And then after 40 minutes, the Zoom kicks us out. So we restart. After 40 minutes, we come back with the same meeting ID and we continue. All right?
Okay.
All right. So right now, I think we have lost about 7-8 minutes. Okay, that's 10 minutes. That's not so bad. Let's get started with the game, shall we?
Yes, sure.
Right. Sorry. I should have logged in earlier. I didn't do that this
time. Ersin and Daring are not coming. You know Ersin?
Ersin, yes. Ersin.
Yeah. Actually, we played yesterday and
yes,
he just gave me some advice on what shall I do.
Yes. Ersin might join. Sometimes he's got a little situation at home because of his wife working in the medical field, I believe. So she has to work and he has to stay at home. So he works from home, I think. So he may not have, or he may not always have the liberty to join. Last time he did join though. And
are you all from India or from different countries?
Yes, we're all from different countries. That's why this time zone doesn't, I mean, we can't change the time because of that. Most of us, this time zone we have adjusted.
The Greenwich time.
Yeah, for the convenience of everybody else. Classic. Let's say login. My eldest son is having his exams, so I've been kicked out of my room.
Oh, how old is your elder son?
He is 14.
Oh, I'm 16.
All right, so you're just old enough to be my son, huh? Okay. All right, come on. Sorry, I should have done this earlier. I should have logged in to the game earlier itself while we were waiting. But I was actually, all right, there goes. Okay, game is cash flow, and I'm opening it for, there's only 4 of us, right? So I'm opening it only for 4. So get in quickly before anybody else. Okay, Daniel is fine, Jake is fine. Right, Ben, is that you, Ben? Did you make it?
Yeah.
Ah, right,
Daring,
okay.
Daring, Dust Starter, and Gorilla, right?
Sorry,
Who is Daring?
that's me.
Oh, we talked
He's very
yesterday.
daring.
Do you
Yes,
remember? My name was Zach. Jake.
Jake,
You
yes,
guys
yes,
have
yes. I remember
nicknames.
that. I remember that.
I will try to get one to myself. Actually, the other day, I've just figured out that some guy noticed that I was playing again with him. So you know, despite the name, really curious. So maybe I will change it.
Okay, no worries. Let's see then.
The dust star name.
Let me put my name over there. Just all right. Okay, I'm going to start screen sharing. The screen. What's there? Okay. Right. So this time I'm a secretary. Very nice profile to play this game because there's very little money. Let's have a look at the financial statement. Payday is only 880, so it's very quick to go into negative payday if I have. What do you think, Jake? No, Sanjit.
Yes.
What is your profile?
Truck driver.
Sorry?
Truck driver.
Truck
2,500.
driver. Okay, all right. 2,500 also, right? All right. Let's see what happens. Okay, and that's it. Stop share. Who goes next?
That's me.
Daniel. Okay, yes.
Truck driver, here it is. So I will choose it.
Okay.
Are you guys seeing my screen, right?
Your screen, yes, it's good.
Yes. Okay.
All right. Nice deal to begin with.
Yeah.
All
It's a
right.
nice deal. I will take it.
Okay. Before you take
Wait
it,
for your
can you do the calculations?
I'll try it. Let's see.
Okay.
So we will have down payment.
Can you zoom up your
60.
screen a little bit?
Sure.
Just so, yeah. All right. Thank you.
I'll use my calc. Sorry.
Right.
Oh. Down payment 16,000.
All right.
So the down payment is about 4%.
4%. Okay.
No, sorry, no.
Mhm.
The incoming is 4% over 16,000. Okay, the cash flow. So 4.6%, and
All right. Okay.
so I think it's
Okay, that's your
nice
cash
deal.
flow returns. Okay.
Yes.
Check on it whether
And,
it is a capital gains asset. It's if it doesn't work on the cash flow ratio, see if it works for the capital gains ratio.
I think it will work for the capital gains because there's always an opportunity. I always consider 30,000 per unit. I think I'm a little bit, how can I say it?
Too much.
Too much negative, I don't know. Because I've seen I've seen market cards with 40 and 45, but it's really rare. But I think that 30 is my target value for the units. So
All right. Yeah.
I maybe end up earning. Let me see.
Okay. Let me run through that once.
40.
All right.
My expectation 40,000
Okay. So
on capital gains.
okay. So the cost is 80,000. If the cost is 80,000 and that's for a 4-plex, so
Yes.
that means each unit is costing only 20,000.
20. Yes.
All right. So now we remember from market research that 20,000 is the lowest value you can have a plex unit for. Right?
Yeah.
Okay. 20,000 is the lowest value. So that means it's almost cost price. It cannot go lower. So that means that is the best price that you can buy to make a profit.
True.
Right?
That's
okay.
true.
All right. So 20,000 per unit itself is a good indication that you can go for this deal. Number one. Number two, the down payment. The down payment that they're asking for is 16,000. Now 16,000 divided by 80,000 into 100 is 20%. Now this 20% is in a real estate property deal. 20% is a market average, or let's say is the higher side average of, or let's say, how can you put it, is the highest it can go. For anything above that may not be profitable. Anything above that may not be reasonable. Up to 20,000 is up to 20% is a reasonable down payment that you could pay. So that means the down payment is fine, the unit cost is fine, cash flow is not so great. There's nothing to worry about, because when we start off, we are not worried about starting off with cash flow. We are worried about starting up with assets that we can do capital gain. We can get capital gains. We can have capital gains on. Right. So that is one. So that means it's a good indication. It's a real value proposition that you have over here, which means you should buy. Again, if you look at the description given, 4-plex available, forced sale. So which means it's a distress sale, which means the current owner has no way of meeting his expenses, and this is the reason why he is almost trying to run away. So he's throwing it off and running away. So this is quite important. These are the deals which bring us the best opportunity for investment. And this is not just in the game, it is also in real life. It's quite similar in real life as well. Right. Let's move ahead. Anything else you would like to add?
No, I think you did it.
Right.
You covered all the points.
That's fine. Right.
As usual. Okay, I will take it.
Right. Let's go on.
Let me check my financial. So
yes,
I've got cash flow of 30.
Still positive payday of 30, which is
still positive. So
yes.
Let's go.
It's my turn.
Yes, Sanjit, can you Share your screen.
Okay. Okay.
All right. Still can't see your screen yet, but I hope it should be coming in. All right. There you go.
It's coming, right?
Yes, yes. Now we can see you. Could you
Okay.
zoom in a little bit? Yeah, that's good.
Can you see it now?
Yes, yes, that's cool. All right. Fine. Go on. Okay. Right. Okay. No. So the whole point of this these meetings that we have over here is to learn to do the big deals from the beginning. Okay. So we normally ignore all the small deals totally. I'll tell you why. Because if you are playing stocks, for example,
Yes.
if you're playing stocks in real life, if you play stocks, okay, Ersin is one of those people over here among us who deals with stocks, but most of the stocks that we see in the game that we are very attracted to, which is the $1 stocks, right? So the $1 stocks, what happens is in real life they are called penny stocks. Penny stocks are stocks which are really low in value, so you can play a high volume of them, just typically the $1 stocks in our game. So penny stocks, if you watch the movie The Wolf of Wall Street, that's a whole movie about how penny stocks are handled and what how they con you almost with penny stocks. So in penny stocks, what happens is these are really risky stocks, stocks which really have no value, but the value is only on the kind of projections that your broker will give you. And they, most of the time, the brokers, they are playing with the people who produce the stock, and they what they do is they throughout these stocks, they push you to buy them. They take your money, they make you buy these stocks, and most of the time these stocks just crash and vanish. These are they go cheap, and then sometimes they can go to zero, which means your stock disappears, your money disappears. And this is the reason why penny stocks are not considered a worthwhile investment, also because it's a huge risk. So if you want to invest your money, it's not an investment grade. And if you know, stocks are graded. Now you have you have your AAA rated. No, you have your AAA rated stocks, and then you come down, and then you have your AAB and B rated stocks, and so on and so forth. So these are the lowest kind of stock where it's almost non-existent. The value of the stock is almost non-existent. And if you play cash flow 202, which is the advanced game of the cash flow, the board game. Cash flow 101 is the 101 is the starting, and then you play 202, and in 202 there are actually market cards where your stock vanishes. So 202 is the closest, nearest to a real market, because it makes it includes a lot more factors, many more scenarios in the one. And I've played the CD version of that. And that you actually get a market card which says your stock has vanished, your stock has gone to zero, so you have lost your money completely. Similar situation to how you see these 3x2 houses disappear because of interest rate changes. So in this game, in the cash flow classic game, you see sometimes you get these market cards which say because of inflation, the bank, you have to return your 3x2 houses to the bank, which means you lose all cash flow and you lose all your down payment, everything that you have invested into it, you lose it. So it's a similar situation with these kind of stocks also. So that is one of the reasons why I personally don't play the stocks, because it doesn't teach you anything. And stocks over here in the game is a very simplified version. So you're not actually learning anything from playing the stocks. Only it's an easy way out of the game to make a quick buck, make capital gains. So because if you really want to do stocks, and stocks is not a bad investment, because Kiyosaki himself, he has many affiliates who promote trading in the stock market, and he himself promotes I think what Andy Tanner, is that Kiyosaki's guy? So Andy Tanner's programs are promoted by Kiyosaki. Yes. So which means if you want to do stocks seriously, there is a study that has to be done. There is a learning process to be done, and then you could take it up as a professional game or a professional participation in the stock deals. But the stocks over here, or in fact the rest of the small deals, probably they are quite close to the real market or real scenarios. But stocks over here are really oversimplified, that you don't really learn anything from them, or the situation doesn't help you understand how the stocks work. So that's the reason why I don't play stocks. If you guys have anything to add, definitely. I wish Ersin was here.
Yes.
He would have definitely had something to say about stocks. All right. So,
I don't know much about stocks, and I consider to play it. But after I read the books, I actually read some books about playing investing on stocks. And I figured out that it was not for me at the moment, because it involves really high risk. It has a lot of variations that you cannot control, and that's one of the reasons that I'm not investing. But maybe in the future, when I get more educated by Andy, perhaps. Actually, once I subscribed the program that Kiyosaki has, and he was offering. And I took a read on the strategy, and because I didn't understood it very well, I put aside. So it's one of the laws that Kiyosaki teaches, which is if you don't understand the business or what you are in, don't go there.
True.
So it's one of my laws for myself.
Same here with me. I would the process of handling stocks. Most people think it's just. Most people can't think beyond a day trading scenario, but mostly it takes a lot more of education to handle stocks rather than just a day trading scenario, or even what we understand, what most people understand about stocks. In fact, my theory is this: for all the people who lose money on playing stocks, who lose money on betting on stocks, gambling on stocks, there are a set of people who are actually benefiting from the ignorance. There are the educated people who are using stocks to take advantage of the ignorance of people who are trying their luck, making a gamble like this. So in fact, this happens everywhere. If you look at even network marketing or even a regular small business setup, one thing I've realized, I've been in small businesses for a while, and one thing I've realized is when you are a small business owner, it is very easy to make or break. So there is it's a very narrow, it's a very pointed tip. You could tilt this way or that way. And part of the economy survives on the money you lose. So it is not so easy. Everything requires education. And most of the time, the reason why we are able to learn from our mistakes is because when we go back, we are able to see what we did wrong and how somebody else actually benefited from it. We are able to go back and see how what we did wrong and how somebody else learned from that mistake, or somebody else did it differently. So it's always in retrospect that we realize these things. We go back and we realize, but we don't see it as we are making the mistake. We don't realize, and this is one of the reasons why a small business, whereas in a big business, if you are if you have a huge enterprise, you can afford to make a mistake or two. Imagine if you look at the lawsuits that Google has faced, Microsoft has faced. In spite of all these lawsuits, in spite of them being fined, and in spite of them being accused of many things, in spite of them, in spite of BP spilling oil in the Mexican Bay, in spite of all these companies don't die. These companies still survive. These companies still continue business. Whereas as a small business owner, if you make even a small mistake, it could turn out to be fatal. Yesterday we were discussing about Ersin and his real estate, his 2x1 investment in Turkey. So this is a very good scenario where he got out with his money. But there could also be other scenarios where you could lose money if you do not know what you're doing. So the same case applies in stocks. I mean, anything that you want to do, any business that you want to be involved with, the most important thing is to have education in it. And most people think stocks are easy to handle, and it's the entry barrier. If you look at businesses, there are two things. One is an entry barrier. How easy is it for somebody to get in? And then there is an exit barrier. How difficult is it for somebody to get out? So in case of stocks, everybody thinks it's easy to get in, it's simple to get in, and they try and get in. The moment they are in, getting out becomes very difficult. The moment you are in, getting out is not so difficult if you are able to forego your losses. Most people, they come back to play again to regain what they lost. And this becomes a cycle. And this, without education, is a very dangerous scenario, because you are playing on emotions, not on you're not on logic, or not on facts. All right.
I can attest to that. So.
Right. All right. So there's less than 1 minute to for this meeting to end. So we will come back with the same meeting ID. And in this case, Jake, if
I would
you
like to pass it.
yes, pass is the
Yeah.
good thing, because we are here to learn about the big deals, and we
Okay,
can
we will
continue with
start
it.
back. Okay.
All right? Okay.
We're sharing this and
Yes, please end your screen.
we'll be reconnecting.
Okay, Ben, don't connect because okay, Ben is gone. Let's
So, Lijo, about the stock markets, yet the other day I can't remember if it was in the book Think and Grow Rich or in the Cash Flow, and there was a sentence that was saying this like Warren Buffett. Well, Warren Buffett is known as the biggest investor on stock markets, right? So everybody follows him. And what happens is when he buys, everybody buys the same stocks. But when he sells it, everybody lose money
yes.
because there is a relation between demand and offer and demand, right, in the market. So when he give up his positions, the market is flooded with stocks, and the stock prices goes down. So it's a great example of not being doing in the stock markets, which is copying others.
Yes, I mean, that is a strategy that doesn't work. I mean, it doesn't work not only in stocks, it doesn't work in business as well. If you have a business, and or let's say if somebody else has a business, and you try to set up the same business somewhere else, trying to copy that business, there is no guarantee that you can make it work just because the other person could make it work. Now, Daniel's business doesn't definitely have to be my best business, even though Daniel might succeed. I've this is very interesting. Once I was talking to an officer in the trade Department of Trade in India, and this officer, I mean, the whole idea of this trade and industries or something like that. So the whole idea of this officer is to help people who are trying to set up their own business or trying to set up new businesses. And so the person just before me, I was listening to this conversation. So the person before me walks up to, takes a seat and says, so I want to start a business. What are the best businesses to start these days? You know, it's like he was asking for advice. What are the best businesses to start these days? So the officer replies, my friend, all businesses are successful with some people. Every business somebody is doing. It is not that it is not that this business is successful during this time and that business is not successful during this time. Somebody is successfully running every business all the time. The question is, what is your intention? What do you want to do? What business do you want to do, or what is your ability? So it's the same case with most people when you want to start a business. So most people, they get influenced by what somebody else is doing. Even studying, taking up education. In fact, many people, many parents, especially in India, I've seen this. I don't know if it happens elsewhere, but now the salaries have gone up for computer engineers. Let's let's ask our son to do computer engineering, or chartered accountants are doing really well. Let's send them for chartered accountancy, or let's send them for accountancy. It is rather about what makes us, what ticks us, not what everybody else is doing. We are, each of us, we have a capability, we have an ability, and that is the most important thing. We have to, I read this from, I think, I'm not sure, Robin Sharma, I think, he's a motivational speaker, Robin Sharma. And Robin Sharma said, if my son was good at tennis but bad at maths, I would rather hire a tennis coach than give him extra tuitions for maths. So if my son was good at tennis and bad at maths, I would rather hire a tennis coach than give him extra tuitions for maths. Because if a child has an ability to play tennis better than he would do maths, then it is asking him to score in maths is like asking a fish to climb a tree. It is that simple. Everybody has their own skills, abilities, interests, talents. So it is important for us to work in those areas. Now, I tell my children, you were born with talent, but if you don't put in hard work, you will not develop it into a skill. You could have a great voice to sing, but if you don't practice singing, if you don't get educated in the techniques, and if you don't put some hard work into developing it as a skill, talent alone will not take you anywhere. It's the same case with business as well. If you have a business idea, if you have a business project, the idea alone will not sell. The idea alone will not take you anywhere. What will take you there is your hard work to get it implemented. If you start, then you will realize what you are short of, and then you can fix it. So this is where the hard work comes in. It is good to work smart, but even smart work needs to be done repeatedly, frequently, regularly, so that it can actually we can actually develop it into a skill. Because talent alone, idea alone, business plan alone will not take us anywhere. It is only because we get educated through our mistakes, we get educated through our implementation, we get educated through our constant, regular activity. So activity is everything. Hard work is actually activity that we do towards fixing what went wrong when we executed it the first time. So our effort should always be our effort should always be in that direction. Not just be smart, but improve that smartness with some experience, and improve that smartness through fixing our mistakes and developing skill. Skill is developed. Talent is, if you could never, if you don't have a sweet voice, then you probably can't sing. But if you have a good voice, you still probably can't sing well if you don't practice your talent. So that's what happens with most people in business. They think they have a great idea, they get started, but then they don't put in that hard work because they think there are many people. I've seen this again. I keep watching a lot of Dragon's Den or Shark Tank. Many people actually get into arguments with these. They become very defensive when they are questioned about their business project. The reason is very simple. They are not willing to put in the smartness to execute their business ideas and collect feedback and fix the problems that they face. This happens quite regularly even with us. I mean, if we look back, if we couldn't make good marks, I mean, if we couldn't get a good score on one of the exams, oh, the paper was tough, or oh, I had a sleepless night before that, so I could not do well. No, it's not possible. It's not the excuse. If something has to be done, there is no other way, it has to be done. And if you could not do it well, if I could not do it well, then there is nobody else to blame but just myself. I take full responsibility of what went wrong with, let's say, I had business partners. I still have business partners. I had a few business partners earlier with some of my ventures which I had to give up. So when I had to give up that business venture, it was easy for me to blame the other partners. I could just say, oh, they did not grow up. They did not come up to my expectations. That was not what I thought would be. I mean, they were not the right business partners for this venture. So I could come up with so many excuses. But the whole responsibility of the business failing or the business having to close down, my responsibility does not go away if my business partners were not the right ones. In fact, it adds to my responsibility that I should have been smart enough, or I should have fixed it from the beginning, that if they are not the right business partners, I should have found some right business partners and taken it forward. There is always the blame game. And Sanchit, you are only 16. It's something that you will see, or it is quite common when you are that young. It's easier.
In April, I will turn 16.
I'm sorry?
In this coming April, I will turn 16.
You are still 15 then. So
yeah.
As we grow older, we tend to realize, or it is easier for us to realize that our responsibility is always our responsibility. There is no way we can blame it on somebody else, or we could pass the buck. In fact, I think there's a book which says the buck stops here. I remember something like that, but I'm not sure. It says the buck stops here. So I am the last thing that, I mean, that's where all the responsibility concentrates. For me, everything that happens around me, everything that happens, I take responsibility for it. I have to accept my responsibility in the whole process. And if I accept my responsibility in the whole process, then it becomes easier for me to fix. It becomes easier for me to correct. It becomes easier for me to improve myself. It becomes easier for me to learn from what went wrong. What went wrong is, fixing the, there's a, I can't remember this movie, but I like this line so much. It's a movie by Sean Connery. Sean Connery did the lead act in that, and some Chinese intelligence and all of that. So in that he says, we are all so focused on fixing the blame, but what actually needs to be fixed is the problem. Just focus on fixing the problem. Fix the problem, not the blame. I always carry that with me. I always remember this line from this movie. Fix the problem, not the blame. All right. Okay, all right. That's a lot of philosophy, a lot of talk about how business happens, but most importantly, it is important to realize that we have to be educated in business or in stocks or whatever it is that we want to do. Education is quite important for us to be successful. If you can do it once, it could be considered a fluke. If you can do it repeatedly, then that is actual skill. That is actual success. That's what we call success.
All right, guys. Thank you so much, Lijo, for everything. So we'll talk soon.
All right. You are already traveling, so I think you will not be able to share screen or.
Okay. I already jumped over my turn because it was
Okay.
just a doodad. So.
All right. Who is playing now? That's mine. Okay. All right. Cool. Let me share screen.
All right. So you guys.
Oh, you're cracking up, Ben. Ben has reached the subway, I think.
Could you please share your screen?
Yeah. All right. So you can see my screen now.
Yes, it's coming.
Okay.
Yeah.
All right. Okay. So let me roll. All right. So I will go
for a small.
Big opportunity. All right. Now, is it actually possible to lose money on a house in real life?
No, it's not. I think it's not worth it.
This is not worth it. This definitely
is not worth it. This is one of the worstest,
yes.
business in the game.
Yes, true. No, but my question is, do you think it is possible to lose money on a house in real life?
Depends.
Yes.
And
Kiyosaki always says that real estate always go high, even with inflation and or stuff. Depends on the time that passes between you purchase and you sell it. So in this case, you have a negative cash flow. So eventually you will lose the money.
Okay. Just 1 second. Hold on. All right. So it is actually quite easy to lose money on a house. It's a high possibility that we would lose money on a house. I mean, in real life. The reason being that in real life, there are so many unexpected, especially when you are small. This happens when you are a small business owner or a small property owner. There are so many things that change in our environment. In 2007, when the economic crisis hit, we saw the real estate prices go down. There are things called market correction. Now, market correction is one of the is something that happens in cycles. I'm not sure. I think Sanjit wouldn't have seen the video about how the economy works. Shivam had posted that.
No.
No, we'll post it again for you. No worries.
Okay, anyway.
We will post it again because it's a really valuable video, and many people have joined since we posted it the first time. So I think I will find it and I will post it again for you. In the meanwhile, but Daniel, have you watched that video? You have watched that video, right?
Yes, I watched it. I think it's one of the best videos.
One of the best ones, yes. So in that, have you noticed he talks about cycles?
Yes.
Right.
So it's the short term.
Yes.
I don't know what to say it in the
no, there are many cycles.
Yes.
Every time you go, if you zoom in and you look at the graph, it's always made of cycles. So the whole thing is like a cycle. When you zoom out and you look at it, you see it from a bigger angle. You see it from a higher viewpoint. Then you don't see the smaller cycles, you see the bigger cycles. So when you look at it on year, you see some kind of cycle. But when you look at it 10 years on 10 years, you see a completely different cycle. And then when you look at it on 100 years and 100 years, then you see a totally different cycle as well. But the whole point is anything that goes up will eventually come down. So real estate also, if you notice this house is $125K in cost, $125,000 in cost. In the game, $135,000 is the best deal that we can get for a 3x2 house. Now, for this 3x2, here let's say this is an up market. Nice 3x2 house with in-ground pool and full appliances available in upper middle class area, good schools. Now, this is something when you want to live in some area, you would always look, okay, as a family, if you want to stay, you always look, okay, can I find good schools in that area? Can I find good neighbors in that area? Is it a good area? Can I say proudly that I own a house over there? So this is one of those. But in real life, these it is about the time, about the amount of time, again, like you said, from the time that you purchase to the time that you want to dispose it, when you want to sell it off, anything can happen in between. But if you watch your cycles, Kiyosaki says you watch your trends. So if you watch your cycles, then it becomes easier. It's still not predictable, but it becomes easier to analyze and decide whether it is actually a good investment or a bad investment. I'm talking about real life, not this deal specifically. I just used the deal as a chance to discuss this topic. So if it goes up, then it has to come down. And the only question is, and again, like the video says, like the video on the cycles, it says, it is not going to go down completely, not to the same level it was before. It will stay a little higher, but it will have a downward slope sometime. So if we are buying in the upward slope, then you are not buying in profit. If you are buying in the downward slope, then you are buying in profit because it can only go down so much, but then everything else can go up. Right? So let me pass this one. And then shops. Right. Who goes next? Daniel. Okay. All right.
That's me. Okay.
All right. Market card.
There's the capital gain.
Okay. Can you just go back so we can have a look at that? Okay. Hold it there. Now, what do you see here?
It's the minimum margin of profit that I was expecting. So because I purchased it at 20,000
Okay.
and the buyer is paying 25, I'm getting 5,000 of profit on each unit.
That's right. If Ersin was here, he would be the best person to talk about the 2% rule. We've been discussing that a lot these days. But according to the 2% rule, and considering that you have not crossed a payday so far, right?
Mm-hmm.
Or
Yes.
maybe one payday, not more than that. This is your second roll or third roll, right?
Yes, it's a third.
Third roll. Okay. So third roll, each roll you can roll a maximum of 6. So the idea of rolling in 3 rolls, crossing 2 paydays, it cannot happen. All right. So unless you are on charity. So so you can safely estimate you would have maximum crossed 1 payday, which means this is a perfect flip. You know what a flip is, right?
Not sure. Can you explain?
Sure. Sanjit, you know what a flip is?
Is it a coin flip or luck?
Sorry?
Is it luck?
No.
Like you,
No.
like you do
Okay.
coin.
Let me
coin flip
explain.
and-
Let me explain that. Okay. See, when it is, let me say, okay. Let me share screen, Daniel. Don't do anything to the game. Just keep it
Okay.
there. I will open Paint so we can actually see some of the graphs. It's easier to explain it with the graph. Hold on a second. My Paint doesn't open. All right, here it goes. Okay. Share screen and Paint. All right. So let's assume we are talking about cycles. So we will have a cycle. Sorry. You can see my screen, right?
Yes.
Yes.
Okay, so let's assume this is part of a cycle. All right, this is part of a right? So this is a graph. This is a cycle that we are talking about. Let's say from now the prices are going up, right? Here the prices are actually going up. True?
True.
Okay. Now, while the prices are going up, right? While the prices are going up until this point, you can buy and you can sell, buy again, sell again, buy again, sell again, buy again, sell, right?
Right.
And this happens in a short span of time. Your time is really small, so which means you buy. Now if you look at what is happening with Daniel's deal, he bought it one payday before and he is able to sell it one payday after, which means in a month. So he bought it and within a month he is getting a bigger offer, he can sell it immediately. This is called a flipping, where you don't hold your asset. You buy it, you may not even pay your full amount for it, you may not even complete the transaction. Before that, you get an opportunity to sell it and you are able to make a profit on that. Now, what happens if you are not watching your trend? If you buy something here, if you buy something here, you are going to sell here, which means you are going to make a loss. And sometimes this curve is not so smooth. Sometimes this curve goes right down like that. Now, if the curve is going down here, it is going to be disaster for you because your money, your investment is stuck and you have to wait until you come back to that level or higher before you can actually dispose your property. And in the meanwhile, what happens is most people who do the flipping, they take loans at very high interest rates. And the interest rates, because these are short-term loans. Short-term loans have the highest interest rates. Long-term loans have lower interest rates and longer. Participant. Hold on a second.
Oh, I got it. Now, yeah. So in conclusion,
Yes.
flipping is selling it for a quick profit rather than holding on a long term for appreciation. Is that correct?
Correct. Correct. So I was just outlining the dangers of flipping also and the advantage of flipping. So if you know the trend is going up, as long as the trend is going up, so this is why it is important to watch the cycles. As long as the trend is going up, you can flip. It is not a problem. You can flip, you can make some capital gains, you can do better deals. But the point is, if you are flipping now, like the people who play on the stock market, if you are playing because somebody else is flipping as well, you may get into trouble because the other person may know when not to buy, and you might be emotionally tied to the whole situation, and you might want to buy and sell and buy and sell, that you don't notice that the trend is going down now. When the cycle goes down, when the cycle turns at this point, the educated flipper will exit the market with his money. The uneducated flipper will lose money in that market. Right, so we just got a chance to mention that when we get this market card. So Daniel, could you share back again?
Yeah.
Right. All right.
So,
So by the 2% rule, you definitely will make a profit. You will definitely make a capital gain over here, and I think you should take it.
yes, I think so.
Yes.
So,
Good. Okay. Now let's go back to your financial statement.
now I have a negative cash flow.
Negative cash flow. You can,
So,
yeah, according to Ersin. Now this is to, according to Ersin, this is, you would want to clear off all your liabilities, all your loan, so you can make some money on your next payday. I don't mind, but I definitely don't want to go into fast track with with very low passive income. So normally I don't do that. I only pay off until my payday becomes zero. It's up to you. If you think you can manage, if you normally what I do is I look at before I roll or after I finish the turn, I always look at am I do I have proper expenses or not, enough expenses or not. I think this one will not affect you even if.
Yes, that's one doubt I have, which
Yes.
is when I have money, what to do with him. My opinion is, if you have money in the bank, you are losing money. So I rather want to pay my debts.
Yes.
And when a deal comes, I will borrow money. So it's my idea. So I will try to pay my debts until my money is gone. The payday will be positive, and eventually I will get more money on every payday, right?
Yes. Yes.
So if some deal comes, I will use that. I will use the money I have, plus
Sure. Yeah.
I will borrow the money, borrow the rest of the money.
Yes.
So
go ahead.
this
Go
is
ahead.
my strategy. So I will repay it.
It's your personal choice.
Okay.
Now it's only 2 minutes remaining. It will be better if you conduct this meeting in Google Meet so that we need not have to get back again and again, reconnecting after every 45 minutes.
Google Meet
How
also
about
does the
conducting
same
this?
thing. If you have more users, it just gives you 45 minutes or 1 hour. That's all.
No, in Google Meet, the time is unlimited.
Okay. Oh, all right, Daniel. Hold on. Now, what you are trying to do is you are paying off all your liabilities.
Yes.
All your liabilities are not. It is not worth it.
Okay.
It is not worth it because if you look at your home mortgage interest rate, your home mortgage interest rate will be somewhere around 1%. Okay. All your other expenses, all your other liabilities, let me share screen. I will, because you don't have any more liabilities over here.
No.
Right. So let me share screen and I will okay, stop participant screen share screen, and let me get my financial statement there. All right. So credit cards. Look at my credit card. I have 2,000 in liability in my credit card, and my credit card payment is only $60. This 2,000 liability, if it were a loan from the bank, I would pay 200, correct?
Yes.
So instead of 200 every month, I'm only paying 60 every month or every payday. Now, if I am only paying 60 in every payday, which means I am saving 140. Now, if I pay off this credit card with my cash, let's assume I pay off this 2000. I took 2000 from my cash and I paid off.
Here we are. So I just noticed that I've been doing something. In this case, in this particular case, I could pay the mortgage because I'm paying 400 and the mortgage is only 38,000. So I pay more than 100 per month. So maybe I should pay. If I want to pay all my liabilities, I should start by this one. And then
Okay. No, if you, the reason why I suggest not to pay off your liabilities is because all your liabilities except your bank loan, all your liabilities except your bank loan come at a cheaper interest rate than your only source of cash. Now, if you want cash during the game, the only option is the bank. Correct?
yes.
The bank will always give you only at 10%.
That's right.
True. So if you will only get it at 10%, any other source of cash less than 10% is your advantage. Now, if you use the cash that is valuable at 10% for you, and instead you pay off your liability, which you are only getting at maybe 3% in this case. Like if you look at my credit card, I'm only paying 3%. Whereas if I have to generate 2000, if I have to get 2000 from the bank, I will pay 200, which is 10%. So I am saving 7% already. But if I use my cash to pay off this liability, I am actually going to lose 140 every month. Every payday, I'm going to lose 140. So that is why
your mortgage is like mine. So in this particular case, is more than 10% that you are paying, right?
mortgage. No, your mortgage, the mortgage is 38.
Oh yes, right. Forget it. I was thinking on 4,000, right?
No, it's 1%.
Yes. You're right.
It's 1%. You know, also, now if you look at these, if you look at it, you will also realize that the mortgage payment has the lowest interest. Now, this is less than 1%. If you look at my screen, you will see $38,000 in home mortgage, and I am only paying 400, which is less than or which is just 1% or 1.01% or something like that. Right? So that is 1%. Now, if you look at my credit cards, that's 3%. My car loan is 4,080, that's 2%. My car loans is 2%. My home mortgage is 1%. My credit card is 3%. My retail debt is 5%. Now, 1%, 2%, 3%, 5%. If you look at it in terms of the period of the loan and the interest rate of the loan, you will realize home mortgage has got 15 years or 30 years. Some countries, some places, it's 15 years. Here in the UAE, In Dubai, it's 15 years. In India, you could go up to 30 years. So I think in many countries, like Australia or the US, you could go up to 30 years. So the longer the period, the lower the interest. Retail debt is the shortest. It's like you finish it off in 6 months' time. So retail debt is the shortest, and for that shortest, you are paying the highest interest rate. Retail debt at 5%, credit card 3%, car loan maximum you would get a car loan for is I think 5 years. So 5 years, that's 2%. Home mortgage at 15 years, 1%. So as your period of your loan period increases, you will pay a lower interest rate, but for a longer period of time. So that's that's what you should see when you look at these different kinds of liabilities that you have. But all these liabilities are less than the 10% that you would pay to the bank. So if you had cash and you had a loan, you had a bank loan, I would pay the bank loan. See, if you have your liabilities, if they are not taking out too much money, or if they are not taking out the same money that your bank would charge you to generate that cash, then all those savings, there's if you look at my credit card, instead of 200 from paying to the bank, I am paying only $60, which means I'm saving $140. In fact, if I pay it off, I will lose those savings. So because I lose those savings, I would not pay off any of these liabilities, which even the retail debt. And if you look at it, the retail debt is charged 5%, which is still 50% less than the interest rate of a bank loan if I had to run for a bank loan. So if I had to take $1,000 from the bank after paying off the retail debt, which I definitely will, because the next move I'm going to make another deal, right? I'm not going to just pay off, keep my expenses low and stay there. I'm going to make another deal, which means I'm going to borrow money again. My whole game is based on borrowing money. My whole plan is based on leverage. So if I have to borrow money in the next deal, then I am paying back. I'm paying back a loan which I only paid $60 for every $2,000 that I borrowed. And instead, I am taking back a loan which is charging me 200 or 10%, which means I am running into losses of 7%, an additional loss of 7%. So if I borrow, if I pay off my credit card at 2,000 and then I borrow 2,000 from the bank again, I have lost my 7% savings and I start paying my 10% interest, which means altogether that $2,000 is going to cost me 17%.
Let me add just one thing here.
Sure.
There is a particular in the game, right? Not in real life. I agree with you, but in the game, I realized that when you have enough passive income,
yes,
you have advantage of paying your liabilities, because you will be out of the rat race faster.
All right. No, in the game, your idea is not to get out of the game, okay, this is particularly for the game. Your
Yes.
idea is not to get out of the rat race faster, because if you lower your expenses, you can get out faster. But if you get out faster with a lower passive income, then you go to the fast track, and then you have to drag along, because many of the deals in the fast track can be done only if you have certain amount of cash. And the deals in the fast track are not small deals, and they are bigger than the big deals that we do in the game. So you probably require $100,000 to do one of those deals. But if you don't have that $100,000, you get out, like say, if you have a janitor profile, your expenses are very low. If you get 1,000 passive income or 1,500 passive income, you can get out of the game. You can get out to the fast track. But what will you actually do with just 1,000 or say $100,000 in the fast track? If you only have $100,000 in the fast track, you cannot do any deal. You will just be going round and round until you cross sufficient number of cash flow days and you collect enough money, and then you will be able to do some deals. And in between, as you are collecting money, if you go to audit or you go to lawsuit or if you go to divorce, all your money is gone. You have to start all over again. So rather than that, I would not reduce my expenses. This is specifically for the game. If you are in real life, this does not apply, because this is not the kind of strategy that you want to play in real life. You don't want to spend money without actually having a reason to spend it. But certain luxuries, certain expenses are required in real life as well. So say if you look at the business community, if you look at a set of investors, Robert Kiyosaki actually mentioned this very beautifully in his book Business of the 20th Century, or Business School, the book Business School, Business of the 20th Century. It's basically a book which is written to outline how network marketing helps. But the beginning chapters, I think the chapter number 2 talks about different ways of getting rich, how you could grow wealthy, or how you could grow rich by and one of those things that he says is you can become rich by reducing your expenses. You can become rich by reducing your expenses and living cheap. But in the end, you will only have your let me hold on a second. Let me bring that book. I know exactly. Unmute myself. Okay. All right. So here's the book. This is the book. Is it mirrored?
Yeah, business
Yes.
school.
It's mirrored. Okay. All right. Okay. So it says the business school. Let
Right over.
me see if I can unmirror it. Okay.
Still mirrored.
Uh,
But it's okay.
all right. Here you go.
Business school. Okay. Second minute.
So this is the book, and here's what it says. Okay, you can become rich by being cheap. Rich Dad said, trying to become rich by being cheap is the most popular way people attempt to become rich. People who try to become rich by being cheap are people who often try to live below their means rather than finding ways to expand their means. The problem with becoming rich by being cheap is that in the end, you are still cheap. All right. So, he talks about so many other ways. Okay, this is number 4. He talks about 11 ways of becoming rich. Okay, 11 ways of building wealth. So it's a very interesting book to read. If you should definitely take a look at it. All right. So he says you can become rich by marrying someone for his or her money. You can become rich by being a crook. You can become rich by being greedy. And then he says you can become rich by being cheap. Now the whole point is if you the financial statement, if you look at the financial statement, it says increase passive income to escape the rat race. You see that?
Mm-hmm.
In the financial statement, the title of the financial statement says increase passive income to escape the rat race. It does not say reduce your expenses to escape the rat race.
That's right.
So the mentality, the attitude that we should have is about this: increase the passive income and escape the rat race. So if you want to be smart, if you want to be better, if you want to grow, then your action should be just increase passive income. And if you there have been games where I exited the rat race with passive income close to $30,000, which means when I get to the fast track, I have 3 million in my cash flow day, or I enter the fast track with 3 million. Normally these days I don't play such games because I think it is not useful. I cannot use that money, so I don't play those games. But the point is, if you increase your passive income, you automatically exit into the fast track anyway. So there is no incentive. And if you exit the fast track, exit into the fast track with a higher passive income, you have a better life in your fast track. You could become financially free. Imagine you think of it in terms of financial freedom. if I had only 1620, like $1,620 in my expenses, and I find passive income of $1,621 $1 extra, it would easily take me to the fast track. But I will have every month or every payday, every cash flow day, I will only get 1,600 or say 162,000. Which is better? 1 million every cash flow day in income, or 162,000 every cash flow day in income? There are so and this is again something that Kiyosaki talks about. He talks about it in his books. He says Rich Dad used to tell him there are two kinds of money problems. One is problem because you don't have enough money, and the other is problem because you have too much money. Which is your choice? Problem because you don't have enough money, or problem because you have too much money? And this is where our mentality has to change. Now, if you are playing this game, if you are participating in the cash flow club, if you are doing these Zoom meetings, if you're learning, if you're getting financial education, then the whole point is that we learn about increasing passive income. We don't worry about the expenses, because increasing passive income automatically means that you are building your capability to afford your expenses. You don't have to worry about you don't have to make an effort about reducing them. Instead, you focus your energy, you focus your thoughts in increasing your passive income. This is what financial education should help us do, rather than think like rather than follow the most popular way. Like Kiyosaki says, the most popular way of becoming rich is to go cheap. Let's not go cheap. Let's learn to be able to afford it. Rich Dad always used to say, how can I afford it? What will help me afford it? What steps should I take so I can afford my expenses? Rather, Poor Dad used to say, how can I reduce my expenses? So it is a complete shift in the thought process of, let me reduce my expenses and exit into fast track. No, let me increase my passive income and escape into fast track. All right, so shall we move?
Yes, sir.
Right, so next is whose turn to share screen?
It's mine.
Okay, all right.
Did you see it?
Yes, it's here now.
Okay.
All right, go ahead, roll. Okay, go to a big deal. Go to a big deal. Let's see what happens. Now, this is something that we need to look at. Okay, all right. Now, you have, okay, Sanchit, your turn. You have to, okay, zoom in a little bit so you can see the deal properly. All right, excellent, excellent. Okay, hold it there. Go back once. One more. Let's see your financial statement also. All right. Now, the whole point of this meeting is to learn to analyze the financial statement. You have a payday of 880, right?
Yeah.
Okay, you have your pen, paper, and calculator with you, right?
Actually, I have the notepad. This is the notepad. I can write here.
All right. So you have a payday of 880.
Yeah.
Wait for a while. Now you have cash of 1,630 only, right?
Yeah.
This deal requires a down payment of 40,000.
3,000. Yes.
Yes. So 40,000 is what percentage of the cost? The first thing to check is whether the okay, you will see in the you will see the analysis of the text, like what's that, reinvesting owner offers 8plex for sale at reasonable price and all of that. We have in some of the previous videos we have already covered what the explanation means, how the text describes the deal. So I will not go into it again. Let's just look at how to make you understand the calculations. Okay, so 40,000 is what percentage of the cost? The down payment is what percentage of the cost?
I will have to calculate it. Okay.
Yes, calculate. Go ahead. This is a practical thing. Did you find it?
Is it 0.07%? No.
No. What did you do?
I was searching for a calculator, so it. Let's walk over here, right?
Check what percentage of down payment is required to make this deal. How
You
can you
mean
check that?
how much percent is 40,000 in the total cost of 2,20,000?
Yes,
220,000.
220,000. Correct.
Okay.
Did you figure out? Sanjit?
It's probably 80%.
No.
18.
18. No. Do you have a calculator?
Yeah.
You have a
I
calculator.
think it's 18% over the down payment, right? I think.
Oh yeah, over the down payment, 18%. I did 40,000 divided by 220,000 into 100.
22,000. No, 222,000. Okay, that should be 19%, isn't it?
Yes. 18, 19.
How it can be 90?
19%.
Oh, it's actually coming 18.181%.
18. No, you did 40,000.
Can you show me the calculation?
Let's
I did this one. Oh, 40, 1, 2, 3, divide by 2, 2, 0. Okay. Okay, this is the answer.
What did you find? I got 19. Did you get 19?
This is the answer.
Where did you post it?
Did you see my screen?
I cannot see your screen. Yeah, I cannot see your calculator.
Oh, okay. I will share the screen again. I shared the Chrome tab, so it is not
Okay.
visible. I stop sharing and I just did enter calculation here, so
Okay.
now it's visible, right?
Okay. All right. This is the wrong way to do a calculation. That's why I said you should use a regular calculator like this.
I used that calculator also, and then also I got 18.181.
Okay, let's see.
Is the correct format of calculation?
No,
the
because
upper
you,
one?
can you do 40,000 divided by 2 to just for 40,000? Yes.
1000 divided by
Divided by 220.
220,000 and
Yes. Equals.
multiply
No,
by
no,
100.
don't multiply. Just say equals.
Okay, it's 0.181.
Okay, that's interesting.
And after
That's it.
multiplying by 100, I got 18.181. You were muted.
Sorry. Okay. Yeah, I got the 18% as well. I think my kids have been playing with my my calculator, and I switched off some of the options.
Oh,
All right.
that means it's not 19.
Yes, you are right. 18%. Fine.
Okay.
Let's keep moving. 18%, and so as a cutoff, normally I would say as a cutoff, it's easier to look at 20% as the for the down payment as the cutoff. It's normal. It's the regular market as well as in the game. I think that's a quite a reasonable thing. All right. Now, what if that is your down payment? 18% is your down payment, which is within the limit, which is fine. Now let's look at what is your unit cost. How much are you paying per unit? So total cost is 220,000, and your total number of units is Total number of units.
18%.
Total number of units.
That means cash flow or down payment.
Right. Now this is important. An eightplex is a building which has 8 units.
Yeah.
It's like an apartment. Okay. So you have to be familiar with different kinds of property like condos, apartments, duplex, fourplex, eightplex. So all these are different kinds of real estate property. Now eightplex has 8 units, which means your total cost of 220,000 is for 8 units. What is your unit cost? How would you calculate that?
Multiply by 8.
No. 8
It's a click
units. 8 units cost you 220,000. 1 unit will cost you?
8 units will cost how much?
The cost 220,000 on your deal.
Then you said how much will it cost, right? So it will cost 27,500.
Correct. So each unit will cost you 27,500. Now we have market research, right? Everything. If you look at one of the older videos, you will see how we talk about how important market research is. So even the trends that we discussed before, the trends are also coming from the market research that we have done. You know, that is, you have to go back to historical data. You have to go back to the transactions that have happened before and then find out how this happens. I think today we will not have enough time to discuss all that because there's only 3 more minutes to end the meeting. But you have to go back to your history and you have to see how the trends have been playing. What is the peak and what is the lowest? So the gap between the peak and the lowest will help you decide where in this graph your current cost is falling. If your current cost is closer to the peak, which means you are not going to make a profit on it. If your current cost is lower and it is closer to the lower portion of the lower value of the trend, then you know you have a possibility of making a profit on it. Because from low it can only go high, but from high it cannot go higher, it can go lower. Now you could get into trouble because of that. So if you have to make a decision, it is not just important, or not just enough to look at the cash flow. It is not just enough to look at the down payment. It is also very, very important to look at what is the trend and how is what is the peak value and what is it's actually called the trough. The lowest value is called the trough value. So what is the peak value and what is the trough value? If you can understand these two values. Now, for a Plex unit in the game, we know, because we have played so long, we know that the maximum price or maximum valuation that you can have on a Plex unit is $40,000. The lowest valuation you can have on it is $20,000. Now, where in between does this current price fall and how can you make a profit out of this? This is the this is how we analyze a deal. Okay, today there is no more time to continue this. It was good to have all of you. Next week, we will probably discuss this. If you bring up the topic, then we will definitely discuss this. Otherwise, I think some of the older videos can also help you on this one. So nice to have you all, guys. I think we will have to wind up this meeting now.
Thank you, Lijo, for your time.
My pleasure. My pleasure. Nice to have you all over here.
Okay. Thank you.
All right. See you next week.
So should we finish